Well, hello, everybody. Hi, Courtney. Looks
Hello.
looks like you guys are there in the conference room.
Yes, we are.
We'll just give it a minute here for people to join. People are coming in right now. That's awesome. Welcome, everybody. My name's Tim. I'm going to be the moderator for today, and just we'll keep this uh, rolling for you. I'm excited that everybody's here. A couple of housekeeping items as we give it a couple of minutes for people to join. Before we begin, a little note from our attorneys. Please note that today's presentation is for educational and information purposes only, and should not be considered investment, legal, or tax advice. Want to make sure we get the legalese out of the way. Again, very excited to have you guys here today. A couple of things to note. We're going to share some information, make some introductions. You get the opportunity to learn about Apex Financial and the Boardroom Fund. And at the end, there's a Q&A. Right now, everybody is, all of the attendees are muted. That's on purpose. It's because sometimes people join, they're driving, there's background noise. We want to make sure that all of the attendees have a positive experience. Also, there's a QA box. You can go ahead and post questions in there. We'll do our best to get to everybody's questions at the end of the session. And if for some reason your question is missed, it may be just because there's a high volume of them. Please let us know. We'll be sure to follow up with you. All right. With no further ado, I'm going to introduce Courtney. Courtney is going to guide us through.
Awesome. Thank you, Tim, and welcome everyone. My name is Courtney Jade, and we appreciate all you guys being here. This is our founder session. We had our official launch with the partnership between Apex Financial Partners and Boardroom Fund 2 weeks ago and have already had huge response. So, as Tim mentioned, this session is a small and intentional conversation designed to introduce you to the people and philosophy behind Apex and Boardroom. So here's a brief outline of what we'll be covering today. Why traditional investing is structurally broken, how hedge funds outperform, why we exist, boardroom performance and strategy, how participation works, and a Q&A session with the founders at the end. So that takes us to meeting the founders, Richard O'Connor and Tom Heckman. Richard, please take a moment to introduce yourself and tell everyone a bit about your background.
Hello, everybody. Welcome to our founders session. Richard O'Connor, 64 years old. Started my career at a pretty young age up in Century City. I was a stockbroker. By the time I was about 26 years old, I got recruited to go work with an investment bank. We did some reverse mergers back in those days. And in March of 99, I was presented an opportunity to go in the oil business. Oil was $9.33 a barrel. I went to Midland, Odessa, Texas, and started rolling up bank foreclosures, ended up with 400 wells under management, and sold that field later between $55 and $65 a barrel. And it was all timing. It was just, I was in the right place at the right time. After that, I worked on a few different startups. One of them was the Penske family. I was partners with Jay Penske. He's the youngest Penske, Roger's son. We built a company called Penske Media Corp, which is extremely successful. And everybody that invested in that deal did real, real well. I retired for a while. About 3 years ago, I decided to go back to work. And I was looking at different opportunities. And I was introduced to this fintech space. And I didn't know a lot about it, but I was seeing some things that were happening, what I refer to as a paradigm shift in trading. And years ago, all these firms had hundreds of analysts that they paid all this money to scrub companies and look at supply chains and P&Ls and balance sheets and try to find the best investments for these hedge funds. And over the last few years, AI came along, and these hedge funds, all the big ones, are now using, machines, that are making a lot of these trades. There's still some human touch to it based on some geopolitical stuff that's out there that has to be factored in. But I started looking at these opportunities, and I found that the returns for people that qualify for a hedge fund are amazing. These guys are making ridiculous returns. And then through my research, I realized that the only people that get to participate in these hedge funds are qualified investors. Qualified investors, somebody who's got a 5-year, $5 million net worth, and most of these hedge funds don't let you participate for less than $1 million. And I thought that was really unfair. So once I started getting into this and decided that I wanted to create a fund for the people, by the people, I reached out to Mr. Heckman, Thomas Heckman, who I had known for some time. I knew of him, and I knew he was a pretty successful guy. He understood the hedge fund space. And Tom and I got together and decided to build a fund for the average investor, for people like my sister, for guys that are accredited, but these are union workers and they're cops and they own furniture stores, but they don't qualify for the big funds. And as long as you're an accredited investor, you could qualify for our fund. And so we have launched a retail product. It's very much like a bank account, and Tom's going to get into that in a minute. You deposit your money, we trade it for you, and we take incentive fees on the back end. If you make money, we make money. Our entire model is based off of you making money. If you make money, we take a percentage of it, and everybody wins. So with that, I'll turn it back over to Courtney.
Awesome. Thank you, Richard. Tom, go ahead and give yourself a quick intro as well.
Okay. Hi, my name is Tom Heckman. I started my career in '99 working on the New York Stock Exchange before internet trading had really taken hold. And I was there through the dot-com bust on the floor. And then in 2001, I moved to San Diego to work for one of the largest activist hedge funds in the world. Shortly after that, 9/11 happened. So in my first 2.5 years, I went through the dot-com bust and the 9/11 tragedy. And, what it taught me is this market can take your money very fast if you're positioned wrong. So naturally, I'm bearish, and being too bearish has also taught me some hard lessons in that itself. I've operations for SPAC. And for those of you who are familiar with the term, at least, and then in January of last year, Richard approached me with this opportunity, and I was pretty intrigued by it. I had been reading a lot about the algorithms and the AI trading, and we went on a hunt for the best programs we could find. And we started that in January of last year.
Yeah.
And we went through 10 months of looking for programs. We went through a few algorithm brokers, and we finally found one that we landed on, who's here today. His name's Scott. And we've tested these we tested hundreds of programs that we've looked at over that time period, and we've landed on these 3. And we believe by spreading money across 3 programs, we drastically reduce the risk involved in going into these type of algorithms. Whereas these algorithms are a single strategy for hedge funds that run anywhere from $70 to $110 million that we are getting these strategies from. We've taken 3 of these strategies and we've spread the risk out to make it a bit of a safer investment for our customers. So with that, I'll turn it back to you, Courtney.
Awesome. Thank you, guys. Okay, so let's talk about the current state of investing. So most investors are doing everything they're told, diversifying, staying patient, managing emotions, and still underperforming. Not because they're bad investors, but because the system rewards speed, automation, and scale. That is why quantitative hedge funds outperform for a number of reasons, because they have superior programs, algorithmic decision making, continuous iteration, and guardrails and risk controls. So, as I mentioned, it's no secret that most people never get access to hedge funds because historically participation required a $5 million net worth or a $1 million minimum investment or personal relationships. not because the strategies wouldn't work at smaller levels, but because institutions had no incentive to serve smaller investors. So that's why this partnership was formed. Apex Financial Partners is a holding company, and Boardroom Fund is the flagship hedge fund under Apex's umbrella. So, Richard O'Connor, who you just met, is the founder of Apex, and Tom Heckman is the founder of Boardroom. They came together to allow a low barrier of entry to high quality programs used by existing successful hedge funds. The vision was to provide middle class Americans and entry level investors access to hedge fund style returns. So, how does Boardroom actually work? Well, Boardroom uses quantitative algorithms fueled by AI analytics to produce above average returns. I'm not a licensed broker, so I can't share historic performance numbers, but Tom is. So, I'm going to pass the microphone over to him for this section.
Thanks, Courtney. So we have three distinct programs that we use. These programs are algorithmic and AI based. Our goal is to provide a diversified approach that doesn't rely on a single market condition, asset class, or time frame. And our three programs are Everest, K2, and Mammoth. Everest is our first one that we use. It is run by 4 to 6 bots that focus on reversal opportunities and momentum. It's our, I would say, the safest strategy or the most risk adverse strategy that we have. We go for 1 to 2% a month in this program. All the programs that we use have been trading for at least 5 years. And this one, it trades in currencies, currency pairs, metals, and indexes. And on to the next one is our K2 strategy. Our K2 strategy has a 7.5-year track record. It trades currencies only. In 2022, it switched to being a fully automated program. It is monitored 24 hours a day to make sure that the infrastructure remains solid. And since 2022, they became automated. They've averaged over 2% a month for their track record since then. Our next program is Mammoth. Mammoth is a multi-asset strategy. It's a semi-automated system that focuses on futures, currencies, and metals and indices. It's the defining characteristic of it is discipline. It's managed on a risk-on, risk-off, or neutral market conditions. So all decisions are made from a macro analysis level. If there's not any good entry points, it is significantly scaled back to preserve capital. It has performed extremely well, and we're very, very excited about the manager of this program. He's an extremely talented guy, and we hope we have a long-term future with this program. So wrapping it all up, you'll see the consolidated program returns. Our programs over the last 3 years have returned 131% compared to the S&P returning 60%. You can see probably the most important thing for investors into our fund is that we have almost no correlation to the S&P. Our correlation is 0.07, which means very weak correlation, which means we perform regardless of what the market is doing. And this makes it a powerful diversification tool for any investor's portfolio.
Yeah.
These are the consolidated program returns. As you can see, these are the last 3 years for all our programs. And then the consolidated one is on the bottom to what they all do together. And so you can go through, look monthly through how these perform. I think there's been 1 or 2 down months between all 3 programs in the last 3 years. And the performance, you see the chart looks a little up and down, but when you look closely, that's only between 1 and 6% on that chart. So it looks more exaggerated. It's a pretty steady line compared to the other programs when they stand by themselves. And I'm going to turn it over actually to Scott. Scott is our program broker, and he's going to talk to you about how he chooses the programs and his experience.
Great. Nice to meet all of you. And I hope you're as excited as I am to be a part of this, working with an elite team like this. who is committed to opportunities that present to you today with the three basic strategies that we have that are what we find is a bedrock of opportunity for you guys going forward. And each of those strategies are provided to me by contacts from Dubai, Australia, New York, Chicago, all over the globe. We work it so you guys don't have to. While you're sleeping, we're working. And we're always sleuthing through programs and doing our due diligence on programs to make sure you guys get the best outcomes from that experience. And as this bedrock continues to expand, we're going to go into the futures markets, equities markets, and any other market that we find that can have sustained success over time that's going to benefit you guys as well.
Wow.
Awesome. Thank you, team. Okay, so if I was considering investing, these are some of the key questions that I would ask. One is how much to participate, what's the risk, what's the process, how long until I get my money back, and what's the upside. So hopefully the team was able to explain the upside and how we manage risk. The rest of these we'll cover in the next couple of slides, and we also have the Q&A here in a few minutes. So how does participation work? We have a minimum investment of $25,000 for the first 100 investors. There's a one-time compliance and activation fee of $1,500. Then there's a performance fee, which is 25% of the profits only. And we use the largest fund administrator in America, which is the NAV Fund Services platform, which we will walk through here in a minute. Tim, do you have anything else you wanted to add to this slide?
No, I think that's great, Courtney. I think the only thing to point out here is like what Richard said in the very beginning. We only make money if you're making money. Tom described this really well earlier this week, that even if there is a down month, we have to make that back up and be above and earning profits before we get our percent here. So it's really set up to have our investors be first and make sure that they are gaining. Back to you, Courtney.
Great. So moving on to compliance, which I will pass it back over to Tim for.
So this is really about how people get onboarded. We use NAV, which is really the 800-pound gorilla in compliance. This is very much like when you decide to participate, it's going to be very similar to how you would open a bank account. In fact, that's literally it. You go, you create the account, you would put your funding in there, and then it's traded right out of that account. We don't have any access to that. So we've gone to a lot of great lengths to make sure that this is very convenient for you. It takes about 15 minutes to get set up, same as if you were starting a new bank account. And we have a team that is here to help you navigate that if you have questions.
I'll also add one thing with NAV. Your money goes into an account that's 100% controlled by NAV. No money leaves the account or goes into an account without their permission. So there's a third party that is in charge of funds that once you put it in there, we don't have access to it. We just trade it to get the money out. NAV has to approve money even if the investor wants to redeem his money, you have to go through NAV and ask for it back, which is easy. But just to make people feel comfortable that it's being overseen by a third party and it just doesn't go into any bank account that's controlled by anyone else.
Awesome. Okay, so moving on to why participation is limited. So as we mentioned, we launched this a couple weeks ago, and in the first week, we've had 43 new investors in some version of onboarding. So this is going to happen fast. We are limiting the initial round at the $25,000 investment for the first 100 investors. The reason for this is there's real costs associated with operating the fund. There's human capital that goes into managing the relationships with investors. And because we only get paid when our investors make money, the $25,000 investment means the cost of managing the investor relationships could be more than what we make. So the next 100 customers minimum will raise to $50,000, and then we'll settle on a $100,000 minimum once there's over 200 investors, which is still incredibly accessible compared to traditional hedge fund requirements. We do also have a preferred access program that exists for qualified individuals below the standard minimum. This is subject to a brief application and interview to ensure responsible participation. And if you are an institutional investor and would like to make larger commitments, we have some benefits for you with larger investments as well. So if you fit either of these categories, please reach out to contact@apexfinancialpartners.net. And at this point, we'd love to open it up for some Q&A. Tim here will help moderate questions, and Richard and Tom are here to answer anything directly.
Thank you, Courtney. Nice work. We have a full house, so we want to make sure we get to everybody's questions. Just go ahead and post them in that Q&A field. You should be able to see on your screen. I'll present them to the team, and we can hopefully get through everybody's questions, that sort of thing. So there's a question here that is, what makes someone an accredited investor? What's the specifics on that? Maybe Tom.
It's $1 million in net worth or $250,000 in income over the last 2 years, as compared to the qualified investor, which is $5 million in investable income.
Okay, so much lower barrier of entry.
Mm-hmm.
Excellent, thanks. Another question is, your track record was quoted as 3 years, yet a quick search of your company, Apex Financial Partners, LLC, suggests your company was established just last month. Is there a link that you can share or that reflects the track record in the company history? Maybe Richard, you want to speak to that?
Well, I think that's a Tom question. I'd be happy to answer, but I think Tom's better suited to answer that.
Yeah, so Apex started with these programs have been trading real capital for the last 5 to 7 years. The longest running one is 7.5 years. Our business plan was to gather these programs and put them into one place. So while that's not the performance that's not our performance, it says that is the performance these programs have had over the last 3 years. So these programs, like I said, they've managed between $70 and $110 million. And this is their track record for their investors, and we're bringing them all together under one umbrella.
Excellent, thanks. Follow-up question. Are fees taken monthly, quarterly, annually?
Quarterly fees. So the fees are taken out quarterly.
Excellent. And same thread here. Do the bots complete any trading to minimize tax implications?
No. So all tax with this fund and most hedge funds in general, any profits will be taxed as ordinary income.
Excellent. And let's see, this one I think is for Richard. Why haven't regular investors been able to access this kind of investing historically? Is there a reason why there's been such a high barrier of entry for the traditional hedge funds?
Well, yeah, I mean, everybody hears about hedge funds and they think this is some, for the elite and for the wealthiest people in the country. And in some respects, it is. These hedge funds, started years ago, and you had to have, $5 million net worth, and you'd have to have $1 million to get started. I think a really good example of that is you've all seen the Fisher ads on TV. Ken Fisher, he's an RIA, and the ads used to say he would talk about his programs for the average investor, and then at the end of the commercial it says that if you've got $500,000 in your portfolio, give us a call. As of January 1st, if you see that same television commercial, because it's all over the place, now you have to have $1 million. And I'm like, okay, so what if you don't have $1 million? What if somebody, is accredited, but they don't have $1 million? They don't get to participate. It doesn't seem fair. It doesn't seem right. So when I first started looking at this, and Scott's going to be able to speak to this a little bit, I talked to Tom and I said, look, what if we were able to put together a hedge fund where we could take this to the masses? Okay, we could take this to the guy who's a union worker or a police officer or a school teacher or a guy who owns a furniture store. How could they participate in something like this? And so we've put this program together. And when we went to the hedge funds, Scott will speak to that. When we went to the hedge funds, these hedge funds are like, unless you've got $25 million under management, we're not going to let you use our hedge funds. We're not going to let you use our strategies. And we said, okay, well, we understand that. But what if we put together a company and we had a marketing plan where we could sign up literally thousands of customers at $25,000 at a time. And, I don't know about you, but if I put $25,000 in a trading program and 90 days later, I was up 2-3% a month, I'd put more money in. And so that's kind of the understanding that we have with our investors. Show us a little bit of trust, put a little bit of money in this thing, let us trade it. You're going to get a statement every month from the company. And once we've proven ourselves to you, you can put more money in. And when Scott took this to some of these hedge funds guys, they thought it was brilliant. So I'm going to let Scott speak to that a little bit.
Well, I also want to add one thing,
Yeah.
just for context. When I worked at the large hedge, I worked at a company, a fund called Relational Investors, and the minimum investment in Relational Investors was $25 million. And you move up the line to Bridgewater and some companies like that. You're looking at some of these funds have minimum $50-100 million investments, and even for the smaller funds, it's most of the time the smallest investment you can make is $1 million in most hedge funds, just because there's we're taking on the challenge of having a lot of smaller investors, to where that's not really something a lot of hedge funds want to deal with. They want to go out and raise $1 million, $10 million at a time. So it's a lot more work to open these smaller accounts, but we think it'll be worth it in the long run.
Cool.
We're proud of it. We really like what we're doing. This is something, a way for us to all give back. And we're really excited about this because I took a couple to lunch the other day, and he's a high school swim coach and she's a secretary, and they were worried that they're going to outlive their money, and I showed them our program, and they got emotional, and they became a client. And if we can do that, if we can go out there and we can help the average person start to make better than average returns, and we make a little money doing that, then that's a win for everybody. And I'm really excited about that. And I really mean that. This is something that I'm very proud of.
Thanks, Richard.
Sure.
The Wall Street has been a myth to most common people. What is it? Where is it? How is it? We're bringing that to your literal doorstep. And that's our goal, our mission, and our plan is to succeed at that level, so you guys not only understand it, you're a part of it. And you're not left behind, you're counted in. And we're using our skill sets, our collective skill sets, our collective vision, our collective experiences, and network capabilities to make sure that you guys have the best of that. And that's our commitment to you.
Great.
That's awesome.
Yeah.
We have a couple of other questions coming in, and we're going to try to wrap this up pretty close to on time. So there's another question tagging on to the previous tax implications question. It's would you not expect, based on the models you use, that we'd be looking at short-term capital gains tax versus ordinary income?
It's essentially the same thing. So they both get the full whatever tax bracket. So whatever your gains are in this is just going to be added to your income for the year. There's no long-term capital gains in these programs.
The people I'm talking to, and I tell them, I said, look, put your money in this thing and let it compound. If you got kids or you got a grandkid or something, open a trading account for him and let this compound. And as your child or your grandson or whatever gets older, they're going to have a nice little, savings account, and they're going to learn about the markets. One other thing I want to make: if you contact this company, one of us will answer the phone. All right, our customer service is priority number one, because a lot of you people won't understand exactly what it is we're doing, and that's why I say just give us a little bit of trust. But we will always be available to talk with you, to educate you, to walk you through the sign up. The statements will come out. If you have any questions about your statement, you're going to get a live body on the phone. I'm old school, and we're going to have great customer service.
One thing to add to that, with NAV has audited statements. So all these statements and trading statements you're getting are audited by a third party. And so you can count the fact that that's legitimately true and 100% in your favor. So everything you're getting from a statement perspective is not done by us. It's done by an independent auditor called NAV as a third party. So that's something you can take to the bank.
That's big.
Awesome. One last question. There may be some other ones in here that we might not have time to get to, but certainly reach out to us. Jim posted this question. Can we automatically reinvest profits to add to the 25,000?
It automatically stays in there unless you request money back. It will stay in the account.
You get a statement every month. We'll have the balance. We'll have the profits. So you'll have a total of your account, and you can always put more money in. You can take money out. I mean, it's your account.
Awesome. Well, thanks everybody for attending. Really appreciate you making the time. Definitely reach out to us. We want to be able to help you get onboarded smoothly. Richard, anything final before we wrap things up?
No, I just want everybody to know, like I said, this is for the people, by the people. It's kind of corny, but that's really, when I think about this is what we're doing. We're just, we're all like-minded people. And we want to provide a financial instrument for people to make good returns, better than average returns that you can't get unless you can participate in a program like this. So, like I said, you show us a little trust, we'll learn the rest.
Awesome. Thanks, everybody. If you had other questions and to get started, you can reach out directly or coordinate with your representative that's been in touch with you. I really appreciate everybody's time. Nice job.
Thanks, everyone.
Thank you.
Guys.
Have a good weekend.